Ross, cyber risk are growing, as well as, cyber insurance, which is, the products that are protecting against cyber risk. Some of the attacks are very well known. WannaCry, comes to mind. Your firm, CyberCube, focuses on quantifying catastrophe risk related to cyber. What is a catastrophic cyber attack?
At the end of the day, at CyberCube, we're here to help be the leading provider of quantification of cyber risk. So our goal is to help quantify what that cyber risk is, put a number on that unknown there. And so as you referenced specifically cyber catastrophe, we define a cyber catastrophe as an event that has a single point of failure, so a single technology underneath it, that then can spread across industries, companies, geographies, in fact. So one single attack vector kind of spreading across all of those areas is how we define a catastrophe, versus we also have in our model what we call attritional loss or large loss. And so that could be an example of something that's not going after one specific technology, but going after one specific company, right? So the difference being, hey, how do I take out something that's based on a 0-day example in one of the operating systems? That would be a catastrophe event versus the target event that we heard about years ago, where, hey, they've gone after a specific vendor who's attacked and impacted Target's ability to do transactions on credit cards. That we would call a large loss, as opposed to a catastrophe that's impacting multiple organizations. And if it's one single technology that spreads across multiple organizations, that's what we would categorize as a cyber catastrophe.
What's the importance of quantifying cyber risk?
If I'm a carrier, for instance, as I continue to write more and more cyber risk, I need to be able to quantify that. I have regulatory requirements around how I manage my capital. I have understanding and need to understand, as I write another policy, what are the implications to my book of business. And so that's why we at CyberCube think that that quantification is so important, is to help us understand within any one organization, what does that risk profile look like in terms of dollars and cents? And then as new risk is coming on to my book of business, what are the implications of that? Similarly, as at an insured, as an institution or an enterprise, as they're looking to make a risk transfer or insurance purchase decision, they need to understand and be able to put dollar figures around that so that they know they're buying the appropriate amount of insurance out there and are managing their risk within their organization appropriately.
What's the importance of quantifying cyber catastrophes?
We would want to tailor that response to the individual insurer and their overall book of business. So as they have tens of thousands of policies on the book, every individual policy has a dollar amount associated with it. As they add more to that book of business, that's an important underwriting decision that has implications for how they manage their capital within the organization, has implications for where they decide to make reinsurance purchases and how they structure those reinsurance purchases. And without that quantification, that organization is kind of flying blind a little bit as they accumulate more cyber risk.
The industry is familiar with modeling natural catastrophes. So what's the similarities and differences of modeling cyber catastrophes?
There are both some similarities and differences there, right? Cyber catastrophe modeling kind of grew out of the natural catastrophe modeling, kind of think wind events, hurricanes, et cetera, that we've been doing for 20, 30 years now. This is kind of a play on that. So some of the differences are, the easy example that I use is the hurricane that's attacking Florida right now or hitting Florida right now, the next hurricane that's forming out there in the Atlantic is not looking at that hurricane in Florida and saying, well, how do I do a better job? How do I make more destruction? Which is the exact opposite of what's happening in cyber, right? Those bad actors are watching each other, looking at the attack vectors that are most successful and tweaking and adjusting their methods to, well, this door is closed, now what's the new door that's been opened as a result of that? So those are some of the differences to that. It's in some ways more similar to like a terrorism type example. Right? This is a man-made risk as opposed to that natural risk that's coming from the winds and those types of things.
Cyber risk is of great concern for both state and federal public policymakers. What's been your experience in working with those officials?
And the fact that we're here sitting here today having this conversation isn't a testament to that, right? We hear, and I think we had over 20 different state regulators represented in the conversations that we had today. So certainly states are absolutely looking at and exploring this, adjusting where they're thinking about reporting and different capital requirements and those types of things as they refine their regulations. We've seen interest also at the federal level. President Biden has kind of asked the Treasury Department to make sure that they have an understanding of what the overall potential impact is to the United States economy as it relates to cyber. And so those two organizations certainly looking together, right, and looking at what are examples of bringing state, federal, and private sector solutions together to help address this risk, provide the proper coverage in areas across that.
With respect to cyber catastrophes, it seems like there's an importance of taking a very forward-looking approach versus a traditional historic approach. You know, is that how you would view that?
It's a great question, forward-looking versus looking in the past, and we think both are important. There's been kind of, even as recently as 2 or 3 years ago, we would kind of hear the mantra, there's not enough data in order to model cyber. And now it's kind of pivoted to the exact opposite of, oh my gosh, there's so much data, we don't know how to manage this. And so as we think about forward-looking versus backwards-looking, one of the things that you take into account with cyber is the doors that have been closed are closed, right? Those things are not going to be future risks. So what we do is we look at the past. We also look at near misses, right? So we've just done some partnerships with a couple of our clients to explore, well, this example almost was really, really bad, right? And there were a couple things that stopped it from being really, really bad. What would happen if these things were a little bit different? And so they had been really, really bad. So those are some of the future-looking and potential examples that we're exploring and incorporating into the modeling that we're doing in partnership with our clients.
What do you see going forward, say 2024 and beyond, with respect to cyber threats, the growth of the cyber insurance market and reinsurance market?
So for the first time ever in 2023, cyber premiums were down ever so slightly. I think that was a bit of a reaction, as is typical in this insurance industry, right? We ping pong a little bit from side to side. We see cyber continuing to grow dramatically for a couple of reasons. One, there's a very significant gap in terms of coverage versus the risk that's out there. At the end of the day, cyber is just underinsured. People are not buying enough cyber insurance. Many people aren't buying any as organizations. So from that perspective, we expect to see the market to continue to grow as people recognize and see how critical cyber is to their businesses at the end of the day, as every business is a digital business and every business has cyber exposures. So we see it continuing to grow from that perspective. We also see the continuing kind of threat vectors and attack vectors that we've seen from the past will continue. Ransomware will continue to be a key factor. The exact way that people get in may tweak a little bit, but ransomware is going to continue to be, it's proven as a space that will continue to have exposures and attacks in that space. So those two areas we'll see continue to grow this as just growing into that underinsured space, closing some of that insurance gap, as well as the continuing growth there. And then I think last but not least in that space, we're also starting to see the maturing of this part of the market, right? We had the first public cat bonds for cyber happen at the end of 2023. So that's very exciting. That means there's additional capital coming from additional sources into the marketplace today, allowing reinsurers and carriers more flexibility, put more of that out there into the marketplace as well. So we see that trend will continue in 2024 as well.
And where can state regulators and legislators go to find out more information about this evolving cyber catastrophe risk?
Yeah, there's a lot of resources. I think certainly, again, this is a great forum for regulators to come and learn about what's happening, out there in that space. Certainly, we at CyberCube are also publishing white papers on a regular basis. We work with our clients, which are reinsurers, reinsurance brokers, carriers, retail brokers, as well as governments and government-like institutions as well to help publish some of those pieces out there as well. We also work with the NAIC, so another example of places where we're working closely with regulators to kind of explore and understand what's happening in the market as it continues to shift and move.
Well, Ross Wirth with CyberCube, thank you very much for your insights on cyber catastrophe.